Your business is our business. You're listening to Brian Bushlach's Business Briefing.
And moving past the bottom of the hour from our Seattle studio this weekend at Talk Radio 570 KVI, airing across Portland, Vancouver on Freedom 970. Glad you could join us wherever you may be as we head into summer. Officially, right? Not until the 5th of July, as the saying goes across the region. But hey, we are in the most interesting region in America right now. Have we created our own economy in the Pacific Northwest? Well, maybe. Depends who you talk to. Where are we in this economic cycle? That's the burning question for business owners and executives across the region. I think if you talk to those in real estate, particularly commercial real estate, they'll tell you, yeah, we're probably, bottom of the 8th, top of the 9th, right? Residential, though, particularly in Seattle, it's a very different story. Maybe third inning. Isn't that crazy? As early as the third inning. Or as the joke is now, we've heard this over and over, maybe it's a doubleheader. We're playing two. That could be the case after the worst economic downturn, the Great Recession, worst thing we've seen since the Great Depression. Maybe we are in an expansion here that will continue for maybe more than 18 months. Maybe it'll be a few years more, depending on where you're at and where you're positioned in your particular sector. To break this down, we call on two experts. First, Michael Lortz from Geffen Mesher in Portland, one of the top CPAs, very plugged in with business owners and executives and the Portland real estate community at large. Wanted to ask him not only about that, but these Trump tax cuts that are being proposed, and really this could have a very positive impact, no matter where we're at, for small business owners across the region.
That's right, Brian. In fact, it's friendly to businesses of just about every stripe. Corporations that historically have paid a fairly high tax rate of 35%, they're excited about the prospects of a 15% corporate tax rate, which we are told at least would make us much more competitive with the rest of the world. And then everybody else is excited also, small business owners, because S corporations, partnerships, entities that small business owners use, they also would have a 15% tax rate on business income on those personal tax returns for the business owners. And so that's pretty exciting.
Yeah, that's a huge headline there. No border adjustment tax. Tell us about this one.
Yeah, there was a lot of discussion, of course, in the press about the president's proposed border tax. And at the end of the day, it appears that did not make it into the president's proposed tax plan. He received a lot of pressure from companies such as Walmart and others that really lobbied pretty hard for that not to happen. And of course, that probably pleases some of our neighbors, Mexico and Canada in particular. Basically, what it means is that if there's not a border tax, that's going to be particularly good for companies that are doing a fair amount of business internationally. Certainly a company like Toyota would be happy that we're not going to apply a special tax. And in theory, that's good for consumers as well, because the cost of a Toyota is not going to increase as a result.
Talk about the switch to a territorial tax system from the current worldwide system.
Yeah, so I'll try to keep that simple. The U.S. is fairly unique right now in terms of how we tax companies that are doing business internationally. Currently, we have a system whereby if you're a U.S. company, you're taxed on your worldwide income. So let's say you have 10% of your income from a foreign country, and let's say that foreign country has a 15% tax rate. Well, on your U.S. tax return, you have to pay tax on all of your income, including the income that's been taxed by a foreign country. We'll give you a credit for that 15% tax you paid the foreign country, but that doesn't help you too much because you're paying 35% here. This change would be in alignment with most of the rest of the world. And basically what it would mean is that you would no longer be subject to tax on your worldwide income. If you're already paying tax to another country at their tax rates, the U.S. is not going to double tax you in a significant way. There might be a small portion that's double taxed, but not in a significant way. And so, in theory, this ought to encourage companies that are wanting to do business internationally, that are wanting to expand overseas.
Michael Lortz joining us here at Geffen Mesher in Portland. And I know one of the things that really excites so many companies, and a lot of them in the Pacific Northwest, I know we tend to think of the big guys, the Fortune 500, the Fortune 1000, but there are so many closely held family businesses in our region that have operations overseas, particularly here on the Pacific Rim, in Asia and those countries. So when you see a one-time repatriation tax reduction, that gets a lot of people excited.
Yeah, there's a lot of companies that do business overseas and then leave the profits overseas. And, you read about this in the news all the time with the giant companies, but it can happen for smaller companies as well. They do that because as soon as they return those profits to the United States, those profits will be subject to U.S. tax. And again, we have a high tax rate. So it's been done before, and what's been proposed is another opportunity to bring back profits that are safely stored overseas and bring them now back to the United States, and to do so at a much lower tax rate than they would normally be subject to. This has been tried before. It's been very popular before. It provides sort of a one-time tax revenue bump for the federal government, and it allows companies to put those monies to work here in the U.S.
Yeah, that would be pretty exciting. Now, the repeal of the Medicare surcharge, I know this is part of the potential repeal of Obamacare, and this is something I guess that's probably a little more under their control.
Yeah, so the Affordable Care Act, Obamacare, included a 3.8% Medicare surcharge. And quite frankly, there's another piece as well that affects employees, which was a 0.9% surcharge. Either way you look at it, Medicare taxes went up. And they particularly went up for investors because that 3.8% surcharge applied to all passive income. It applied to capital gains from investments, interest from the banks, dividends from stocks you owned, etc. So the repeal of that surcharge would put active and passive investors on a more equal plane. It would reduce taxes on making investments. Hopefully that would encourage additional investments.
Individual rates, and this has gotten really in mainstream media, the bulk of the attention was across the board tax cuts. Of course, we hear tax cuts for the rich. Really, it amounts to tax cuts for pretty much everybody from what I see.
Yeah, right now we have a lot of different tax rates, and as part of simplification, there's always a desire to reduce the number of rates. And so the president's proposal would not only reduce rates, it would also put them into just a few categories. And those categories are 35%, 25%, and 10%. Now, what we don't know is at what income levels each of those rates would apply. Those details still need to get worked out. But we would have a simpler rate system and a lower rate system because right now the top rate is 39.6. The top rate would now become 35.
Well, always great insight from Michael Lortz at Geffen Mesher in Portland. If you'd like to reach out to Michael, a quick question, hey, just shoot him an email, mlortz@gmco.com. One more time, mlortz, Lortz, @gmco.com. Happy to get back to you with your questions, some great insight there. And when we come back, we're going to move to Seattle now and talk residential real estate with one of the top advisors in the region, Dean Jones at Realogics Sotheby's International. He has a very different take on things. We might be very early in this economic cycle thanks to things that are happening beyond our borders. That's up next as Business Briefing continues on Talk Radio 570 KVI and in Portland on Freedom 970.